All right. Hello, everyone. Welcome to the EnerCom Oil and Gas Podcast. Thanks once again for joining us. I'm Glen, Parrott, and I'm joined by my co-host and Managing Director of Consulting Services here at EnerCom, Aaron Vandeford. Aaron, hello.
Hello, hello.
Thanks again, for being here again for everyone. For today's podcast, we wanted to change things up a little bit. For the past few podcasts, our listeners and you have been really introduced to EnerCom and heard our views and our perspectives on the oil and gas industry, current activities and news and what we're seeing. But today, I'm pretty excited because for the first time, we've asked our first guest to come into the studio so that we could get his perspective on the industry. And it's a perspective not only based on his vast experience in energy investing, but also his experience on the operator side of the equation. You hold a unique position between the two, and he has a view from the board and what concerns board members deal with, and so we thought they'd be wholly additive. And so joining us today is Kevin Andrus. He's the CFO of GMT Exploration. Good afternoon, Kevin. Thanks for being here and welcome.
Thanks, Glenn. It's a pleasure to be here, Aaron. It's a pleasure to be here. So thanks for the invitation.
No, and that you came here on short notice. I appreciate.
Well, it's an honor to be the first outside guest for the EnerCom podcast.
I was just going to say, do we have to get a plaque for this, or another thing for your resume?
At least a plaque. So,
how about a business card sculpture?
That works too.
Okay.
So that's a good prize.
I was going to say, leave us 35 of those bad dogs, and we'll get you something cooked up, some type of rig. But and Kevin, just so you're aware, we're 4 podcasts in. Background has been Aaron and I sort of going through this whole dialogue of EnerCom sitting in this intersection between the oil and gas industry and the capital markets, and these are just our views, but really what's interesting for me and why we wanted you to have you here is because you really sort of embody that at both levels of, you've been on the buy side, mm-hmm. extensive career there, and you're also on the operator side, and you hold this unique position of being able to kind of also speak towards what boards are interested in. And I think that's going to be a value add for our listeners here today. So, that was the premise behind this. So again, thanks for being here.
Fantastic.
So now, before we get too far down into this and your bona fides, as it were, what are your thoughts on Chevron and Anadarko, the big news of the week?
Yeah, I think it's a great deal for Chevron. I think they're buying a fantastic suite of assets, and I think it's an indication, or it's a sort of a picture of what's happening in the marketplace. You've seen, and we haven't seen a whole lot of public-to-public M&A activity over recent years, but we have lately. And I think with multiples in the marketplace at historically low levels, I think that's going to be driving more public-to-public M&A activity. And so if multiples stay where they are in a healthier commodity price environment, I think you're going to see more of it.
Were you surprised at all when that news came down?
No, Anadarko's been rumored to be taken out for a number of years, and so I think it was only a matter of time. I think we heard that there may have been a competing bid from Oxy.
Oxy, yeah.
Yep. And so no, it's not surprising. They've got a strong suite of assets, and so with the valuation that Anadarko was trading for, I think it was only a matter of time.
Yeah, we talked a little bit last week or earlier this week, I should say, that this was kind of maybe a healthy M&A versus some of the things that we've seen on the corporate side earlier or later in 2018, where there was corporates getting together to fix a balance sheet or something like that. Mm-hmm. This was a potentially multiple bidders, saw an undervalued opportunity, a good suite of assets, and was able to be additive instead of necessarily having to fix something. And I think that we kind of thought that should be a positive for not only the space, but kind of an eye opener for investors. Being on the buy side, do you agree with that or no?
Yeah, no, I do agree with it. There's going to be tremendous cost synergies, and I think it's more of a, there's a transition by the majors from offshore and large international projects to being able to bolster and augment their onshore asset base. And so I think Anadarko can check a lot of boxes at a reasonable price for many of these guys. And I think you're going to see, I'm more optimistic about public to public M&A than I am, call it public to private. I think there's probably a larger big ask spread between PE-backed firms and what companies are trading for in the marketplace today. Maybe you see some private to private transactions. There's cost synergies to be had for portfolio companies of larger PE firms. And so I think you'll see an active M&A market, and it's probably a unique time where like I said, you see more M&A activity in the public market.
Mm-hmm. Yeah, it'll be interesting to watch.
Yeah, absolutely.
For sure.
More to come.
All right. Let's kind of get to it a little bit with regards to what you're currently doing. Just cover that over. Tell us a little bit more about GMT Exploration.
Yeah, so GMT Exploration it's a private oil and gas company based here in Denver. We have current operations in Wyoming. It's a legacy. We have a legacy gas asset up there with some horizontal activity or opportunities that we're pretty excited about. We have operations, we have prospective operations up in northwest Alberta, and we have a position here in the DJ Basin, east of Denver and sort of south of the airport. So,
And your role there?
So I'm the CFO. We've sort of we're a smaller shop, great group of individuals who've been very successful generating value over really since the inception of the organization. So I'm fortunate to be able to join a very strong and good team. So
right on. Yeah, and that's we talk about now you've got this experience. You're on the corporate side of the equation.
Mm-hmm.
You've really sort of been involved with it for several years, but you've also had an extremely successful career as an energy investor, spanning initially long only, and then certainly the hedge funds. But before we even kind of get to that point, tell me first how you ended up in energy. So there's this young kid, Kevin, graduating from college, and you're like, man, energy's it for me.
Yeah. So my dad was in the energy industry, and I saw, prior to the, to the crash in the '80s, it was a great business to be in. There's a lot of camaraderie in the business, and so it always fascinated me. At the same time.
So you had that background, that knowledge of generally the importance of energy.
Exactly. And then, but going through college and sort of growing up, I always was fascinated with Wall Street, and so the industry or the career path I chose was sort of the intersection of those two loves, I guess, if you will.
Yeah.
So I was fortunate to come out of college and get a job with Invesco funds. That eventually led me on to the team that ran the energy and gold funds, and so it was it was a fund that had tremendous success. It was led by a very smart guy, and was fortunate to learn from him.
Okay, I was going to say, generally, was there anyone early on in your career, let's just call it, even if, I don't know, maybe perhaps before Invesco, that really influenced you early on? Anyone kind of stand out?
I'd say
other than your father?
Yeah, not from an not from an investing standpoint per se. I've met, I've been very fortunate to work with a lot of very, very smart people, and I've learned a lot from them, and so I'm blessed in that way. I think I go back to my intern days and worked with oil and gas. I'm sorry, with with a magazine that was focused on investing in the space, and so had that exposure. Heard Tom Petrie speak earlier, or very early in my career, and I was very impressed by him. And so,
So the
you know, bits and
Petrie
pieces.
Buckman days?
Yeah,
Yeah.
you know, bits and pieces here and there. So,
Right on. See, had you asked me, I would have been, oh, my wife.
yeah,
Very influential.
my wife has always been very supportive through my.
Well, that's good.
efforts, so.
Those are two of our very important podcast listeners, I'm sure.
Yeah, I was going to say, dude, you got to cover that. And so at Invesco, they had all the sector funds. Certainly, energy was one of them. And then Invesco, this no-load mutual fund shop, merges and gets into business with AIM.
Mm-hmm.
So how did that go?
Yeah, you know, it was it's sort of an interesting transition, but even to take a step back and you know, go back to my days at Invesco, and Invesco was a unique shop in that they had their, you know, long only diversified funds, but we also had the sector funds. They're sort of two separate, you know, and more distinct investment directives. But we worked very closely across the sector team and very closely with the diversified portfolio managers. And so it provided us a unique perspective. You know, if I was in an energy-only shop at the time, I would have missed out on some of the perspectives I've been able to gain from folks in other industries as well as the long-only portfolio managers. And you know, you get bits and pieces of information from everyone.
So in looking, kind of going through your bio here, I mean, when I think of AIM and Invesco, or Invesco AIM, that you kind of reached a point in your career where you had a choice. Am I wrong on that?
No,
where
that's
where
correct, yeah.
you had the opportunity to go down, well, quote unquote opportunity to go down to Houston. Is that right?
Yeah, that's right. So I was offered, you know, a higher level position down in Houston. It was a very, very difficult decision. AIM was a well-respected firm, but if I was going to move my family at the time, there were other things going on. I really wanted to sort of stay back and try and launch my own fund, and that had always been a dream of mine. And so was able to see that dream come to fruition. A lot of effort went into it. A lot of things had to come together for it to work out, but it was just a great opportunity and incredible learning experience. So,
And so you did start that fund, ran that for what? How long did you have Colorado Capital?
yeah, so I think we were six years into it. So,
And what was the kind of strategy as you kind of, I guess, learned from what you had seen in prior that you wanted to implement on your own side?
yeah, you know, I think. So I think from the perspective of investing in the energy space, there's both the macro drivers and the micro drivers, meaning at the company level, and wanted to try and put those together and develop performance that was successful regardless of the commodity price movements. And having a hedge fund allows you to do that from a much easier perspective. And going from a long-only sector fund to a hedge fund, to a long-short hedge fund, it's different, and there's a learning experience that has to happen as you go through that process. But they are very similar. You're in a sector fund. If you want to outperform, you have to avoid the underperformers in the marketplace. Well, as a hedge fund, you get to be more active in that thought process. And so it was unique. I think we were trying to provide strong risk-adjusted returns, and when we ended up closing it up, there were some issues outside of our control that led to that. But I think our performance spoke for itself, and we were able to do that. So
Very cool. I have a couple other questions on before we kind of jump into the next part of your career. You obviously moved into a role as portfolio manager at GMT Capital, but as you kind of have shaped your path and you had your own firm, were there some things that were consistent across companies that, hey, you know, I try to look at whether it's long short or long only or hey, I get to play more on this other side of the underperformers, that you would kind of point to, and did that change over the time of your career? Or were there some constants that, hey, as long as I've got this, then I can move on to the next thing?
Yeah, that's a great question. I think, you know, there are themes in the marketplace that go in and out of style, but I think asset quality, balance sheet, management's focus, their ability to communicate their strategy to the marketplace. I think those things never go out of style, and they're exceptionally important. I think management teams that are willing to have and develop a strong relationship with the investor base is important, and you see it in the multiples over time. And so, but, you know, that being said, asset quality is, you know, asset quality and management are key to stock performance over the long term. So I think those are very consistent themes throughout my career. I'd say from an investing standpoint, process and discipline are the most important, and sticking to those, even through very difficult times in the marketplace. You know, just from my own experience and from looking at others who are successful, those are the two tenets: process and discipline.
Mm-hmm.
So.
And I know I have a very strong opinion and bias on my next question. And so I won't share it until it's probably a little self-serving knowing what EnerCom does, but how important is did you find your time meeting with those management teams, since management team was one of your criteria?
There's new selection bias, and so I appreciate where the question's coming from, first of all, but there's new idea bias that happens with anything that you do, and it could be the commercial you saw on TV, but it's also true with the company you just saw. And so if a person is effective at telling their story, your inclination coming out of that meeting is to go buy, and so it's that's kind of where discipline comes in. But at the same time, and I think you see it in this marketplace, there's a reluctance for management teams to travel and tell their story because, well, I don't know if anyone cares. You know what, at some point, and this gets back to what we were talking about from when we were talking about the Chevron and Anadarko deal, there are a few things that can turn stock markets around and get people to pay attention. There's a very tight correlation between WTI prices and stock prices in the energy sector. You've seen a divergence, or you've seen that correlation break down over the last few months. But at some point, there's going to be a catalyst that gets those to converge again, and it could be underperformance in other sectors. It could be people just recognizing the cash flow growth that's happening because of the commodity price, but it also could be M&A driven. If the market's not going to pay, if you can more efficiently and more cost effectively go out and buy assets than you can to drill, then companies are going to do that, and it's going to create these opportunities. But there's going to be something that happens from a catalyst standpoint. And so the investor base is going to turn around. And so when they do, they're going to look for companies that they're familiar with. I mean, it's human nature to go out and look for something that you're familiar with, instead of coming down a valuation table or just reading through others' ideas. If you've heard a story that's recent and that's up to date, that's probably going to be your first pick.
Okay.
So I would encourage management teams to continue to get out and tell their story.
Yeah, and that's just it. Is that I also appreciate where Aaron's coming from that, and I love hearing this information because it is important. I think that let me ask you this variation of this now. Some of the things that we get back from conferences occasionally is, I just want to talk to long only guys. I don't want to talk to you hedge fund types.
Yeah,
for the obvious reasons, right? And maybe they're feeling that is it detrimental for them to come talk to you at that point?
Anyone who buys your stock is beneficial to your cost of capital. And so whether it's a long only buying the stock, or whether it's a hedge fund manager who happens to be short your stock, if he has to cover his position, that's going to boost your stock price as well and lead to a better cost of capital. So I would continue to get out there and tell your story, because incremental buying in your stock is going to be positive. So
Okay. No, that's good.
really across the board. So I don't think it makes sense to differentiate between the investors. I would say that there's stickier money to be had at the retail and high net worth and family office level, and so I think those types of investors are great ads. In addition to the larger long onlys. So
Gotcha.
from my perspective as a corporate guy now and a board member.
Yeah, but before we get there, so
sure.
we've kind of gone through the progression, right, from early on in your career and through Invesco, and then through your own experiences of standing up your own hedge fund, and now you take us up to the next step here, which is, and Aaron kind of mentioned it, was GMT Capital. So you moved over there, and tell us about that.
Yeah, and I'll speak very generally as a firm, because they are a private investment fund. But I would just say it's run by a gentleman named Tom Claugus, who I have tremendous respect for.
But you were doing the same thing. You were focused. You were the PM of their energy book.
Yeah, exactly.
Okay.
Exactly. Tom takes a very, very long-term approach in the way that he invests. He's very process-driven, very thoughtful about the way he puts money to work. There was also an opportunity for me to join a few boards there, and so that was a great experience that we can transition into. But
did it change fundamentally was it additive to your investment thesis that you had prior, or did it fundamentally change the way you looked at? I imagine it would be additive, but
it was additive because there's a deeper dive at the company level and there were more resources available to us to be able to do that than I think we were able to do at a two-person shop hedge fund that we had before on the investment side. And so there was a deeper dive level. Me being able to join boards allowed me to get deeper into the industry and understand it better.
So what was that like for you? So now you're in this position, and you guys are certainly having larger stakes within firms, and to the point where you're now, hey, board membership is part of this deal, and now you're able to be on the board. And what was that like for you as you became more involved in that?
Yeah, and I'd say we would never sort of force our hand for me or anyone else at GMT to be on a board, and so it was always an invitation.
Yeah, well, I didn't mean to imply that. I guess.
No, sure. Just to sort of clarify.
Fair enough.
Just to clarify, and so, but there's a lot that goes on behind the scenes that as an investor you don't get to see, and so it's educational to see that, again, from an investing perspective, how things come together, and it's tough, and I have a lot of respect for those, even before I got into industry or moved over to the corporate side. I gained a new respect for what it took to run and operate an oil and gas company. It's tough, and there's a lot of work and effort that goes into it across the team, and so that was very illuminating for me to see.
So along those same lines, if we can, let's open those boardroom doors. What are the main concerns that the board is looking at right now in the industry, from your perspective?
I think, and I'll speak for myself.
Sure.
For me, it's always making sure that we're doing things the right way as an organization, and running the business the right way, from community standpoint, from a regulatory standpoint, because if you get offsides in either one of those, you're in trouble. And so I think those two are paramount. You have to get along with the people who you work with, and the communities that you work with, and that's what I mean by that. Beyond that, it's making sure that you have the right management team running the asset, that they're effective in navigating a very volatile commodity price environment, that you have a strong balance sheet that allows you to take advantage of opportunities that arise, and it's motivating those people within the organization, that you can have continuity in strategy, and I think those things are very important. So.
I'm sorry.
No, go for
Okay, I
it.
didn't know if you were going to say or ask anything, but I was kind of curious. And when we talk about the primary concerns of the board, but some of the responsibilities, yes, you want to certainly be acting in good faith, but you do have to tackle some challenging issues, certainly, and risk management being one, compensation, a lot of chatter, at least that we're hearing in terms of from the board. How do you guys look at compensation specifically, is to balance G&A expense to performance of the team? And I think I'm hearing more about that, and I don't know if you have any thoughts on that.
Yeah, no, and that's a challenge right now, because there's a lot of push from the investor base to lower compensation at the C-suite level, and obviously a big part of that's being driven by the performance in the equity markets by the oil and gas names, and so I think it's frustrating from the investor standpoint to see large payout packages when stock prices are down.
Right.
And so that's a challenge. And so you saw a strong push into that last year, and there's some carryover into this year. At the same time, with those flatter stock prices, options haven't been that lucrative for management teams, and so you have to figure out ways to motivate the management team and to keep them engaged with the asset. And just for the reasons that we've talked about before, we want continuity of strategy, and so that's a challenge. And it's a balancing act between the two. There are firms like ISS and
Right.
Glass Lewis
Yeah.
that put out sort of guidelines, but and they'll put out recommendations or opinions on what individual companies are doing, and sometimes they don't always follow logic, in my opinion, those recommendations, and
Gotcha.
They can be counterproductive and counterintuitive. But at the same time, you have to pay attention to them, and you have to be mindful, of what you're doing as a board. You're there for the shareholders, and so we can never forget that. So.
And so, as we kind of came into to stay on this compensation side, and I remember, I think it was EOG was one of the first ones to change the way that their management was, the specific metrics that they wanted to incentivize their management team, and started to put in this free cash flow or cash flow metric.
Yeah.
Whereas we historically had this growth metric, and we've certainly seen that in the proxies, and we've seen all the proxies kind of getting out. As you kind of think of from a board perspective, how often would you identify things that you want to change or incentivize for a management team? What are the catalysts? Obviously, a huge, going for 100 plus oil down to 28, that's a big catalyst. But
Yeah.
what are some of the catalysts to kind of go back to maybe a growth? Is that going to be driven from the board level? Is that going to be investors? Is that going to be something else?
Combination of.
Yeah, and I think you have to manage your company for the long term, and like I said, there are going to be things that come in and out of favor from an investor standpoint, but I think if I'm thinking about what's going to drive incentives more toward growth, it's going to have to be cash flow growth. I think there's, and And it'll be interesting to see if we've seen a permanent change in how the investor base is going to look at oil and gas companies. I think you saw a transition. We're very, historically we've been very active in Canada. I think in Canada you saw a transition by the investor base probably back in 2014, 2015, more towards sustainable growth. That sort of mentality has a bunch of different sort of names to it, or it's called a few different things, but that's really what it's about. It's sustainable growth within or near cash flow. And so that mindset and sort of that change in opinion, I think, is fairly strong. If we get in a more positive commodity price environment, I think you'll see the capability for growth, for higher growth rates out of companies, higher sustainable growth rates out of companies. I don't know, maybe you add or you shift some of those metrics back toward compensation and performance review, but I think it's going to really be more around sustainable growth and managing your balance sheet. I see this lasting for a while. I don't think it's going to be a passing fancy. So.
Gotcha.
Yeah,
Did I answer your question? Is that,
no, I think you answered.
so.
It was perfect. No, I tend to agree along that line. It seems like this cash flow mantra and the sustainability and wanting healthier companies, not only from seeing some more generalist investors coming into this space who's used to seeing that or expecting that in some other industries. I think that's going to stick around, and I tend to agree with you. And so, along that same line, what role is the corporate social responsibility in this environmental conversation that we're seeing a lot of companies come out with information to the public. Some of that's being led by investors, groups like BlackRock saying, hey, we want to see this.
Right.
But how is that conversation going in the boardroom as well?
Yeah, I think it kind of goes back to what I said before. I think you need to make sure you play well with the interested parties around you, and that's the community and the regulators. And so, and at the same time, to your point, the investor base has become more active in that way. And so I think that is on a go-forward basis, that's going to be a cost of doing business. And it's always making sure that you're doing everything the right way at all times. But now you have to document it, and you have to let people understand how you're doing that. I'll think about, if I think about operating in Colorado here, there's a lot of sensitivity about operating around neighborhoods and schools and just people, populations in general. And so being able to communicate that your number one goal is to do things the right way, I think is very, very important. And there are some people you're not going to be able to, convince that you have good intentions. But I think if you can educate the general public that it's higher on your priority list, it is the number one priority. I think that's going to help your process.
Mm-hmm.
So.
I think that's a healthy dialogue. I mean, we've spent a lot of time on 181, but
I'm a rural operator, Aaron.
everyone in the DJ now is a rural operator. We've decided. Yeah. But it's an important stakeholder that certainly plays a very big role in your cost of capital if you think about it that way.
Absolutely.
And it should be thought of so. And so I really do believe that I think there's obviously both sides of it, but most of the industry is pretty genuine in what they're trying to put out to investors, put out to the general public in what they're doing. And I think it's incredibly important that we're actually having this dialogue, and it's one of those things to do it, and I think industry has been doing it, but now to tell people about it is just as important.
And if I can sort of address it from each seat I've been able to sit in. I think from a corporate standpoint, just morally, you want to do things the right way. Nobody wants to be on the bad end of an accident. Nobody wants that, and it's not just from a financial standpoint, but a moral standpoint. It's very, very important. As a board member, if your responsibility is to your shareholders, you want to make sure that the company is being managed correctly. Companies that are well managed tend to do things the right way. And that just it's a symptom of how the company is being managed. And
Any examples that you want to share or are comfortable sharing?
I'd say just a company I was involved in from the board level and from an investment perspective was Blackbird Energy. Blackbird had acreage in and around Grand Prairie, and they were exceptional at working with the community.
Yeah, I
and
remember Garth's
addressing
presentations.
and addressing industry concern or neighborhood concerns,
Community stuff.
Community concerns. Thank you. I was looking for that word, but community concerns in and around, and they had very active dialogue with the community, and it absolutely benefited them, and it benefited the community.
So what do we, and this is a little bit of a divergence, but I think it's interesting because you guys spend a lot of time investing up in Canada, and you've part of your career been up there and sit on some boards of some companies up there. What do we have to learn from a U.S. perspective of maybe some of the things that the Canadian companies are already inherently doing? They're having to work with First Nations, they've got, not individual landowners for the most part, so it's a lot of working with governments. I think there's a lot to be said of looking north to learn a little something for some of these guys.
Yeah, and I think most of that we've touched on already.
Yeah.
I talk about sustainable growth, living within cash flow. I'd say, if we're talking about debt levels on an organization, Canadian companies tend to be less levered than their U.S. counterparts, and I think that's effective corporate management. And then to your point about dealing with regulatory bodies and communities, I think they tend to be very active in that because they have to be. And but I think we've mostly touched on the things that I would say we could sort of glean from the people up north. So
The
northern people.
the northern people. Yeah.
On that spectrum, though,
Our
so
northern
you,
friends.
yeah, exactly. You come on into your board meetings and it's more than just management of G&A and compensation and risk. Is there what's the number one thing that generally tends to float up to the top of the list that you guys are addressing immediately right out of the gates, or is it dynamic quarter over quarter? Or?
Yeah, it tends to be dynamic quarter over quarter, but it tends to be a lot of the same things. Operational management, again, some of the things we've talked about. G&A focus, management efficiency, the long-term plan, making sure we're maintaining a strong balance sheet.
Yeah, and
Those
just making
kinds of
sure you
things.
guys are doing the right things, checking off the right boxes.
Exactly.
Yeah.
Exactly. So.
Okay. What's your best experience as a board member?
Just feeling like you're a part of a team,
Oh.
and you're seeing something built. I guess it's like a farmer, planting a seed and being able to watch it grow and harvest it. And so, I think from my perspective, it's being a part of a team, and seeing something grow and develop. It's very, very rewarding. And there was a trip I had taken up to Grand Prairie to look at the facilities that Blackbird had built, and it was awe-inspiring just to see and to be a part of that process, and it was fantastic. It was great.
That's awesome.
So,
Very cool. I know I've seen boards that work really, really well, and I've seen boards that are kind of struggling to figure out, how do they want to work with management. There's very different ideas. And I think the ones that obviously, we're not all here to get along to just get along. We're going to figure out the best ideas, and it's really that team mentality. You really start to see something pretty special come out of those, and I think it becomes a really important sounding board for management to check some of their ideas off of and say, hey, am I way off base here? So, very cool.
yeah, and I think it's you want to work with your management teams. You want it to be a positive working relationship. You want it to be a positive working relationship with your fellow board members. You can get a lot more done when everybody's working in the same direction. So
Yeah, right.
yeah.
Yeah, I can only imagine if you have a dysfunctional board and how that's going to percolate down. I mean, even how long that would last, I don't even know. But I have no examples. I just.
And nor do I. I've been very, very fortunate to be on some great boards with some great people that I've been able to learn a lot from.
Right on. Okay. Did you have any other questions, Aaron?
No,
with
I
regards
thought that was
to-
awesome. I felt like I was sitting in a board meeting a little bit.
I know, it's like, okay.
It was quick. So no, I really appreciate that perspective. It was really cool.
Thank you.
Yeah, no, I appreciate that because
pleasure.
we're heading about 40 minutes into this now, and I don't want to take up your entire afternoon. But I do appreciate your sharing with us specifically, across the spectrum, which I think is very applicable to the place that the space that we occupy here. So, any questions of us?
No. Thank you very much for inviting me. It's been a pleasure to be here, and I wish you guys continued success with your blog platform. So, podcast.
Do you?
platform.
Yeah, let's podcast the oil and gas podcast.
Exactly.
The OG
Exactly.
podcast. Do you care to share your outlook or forecast for WTI for the remainder of 2019?
I think it's an interesting market environment that we're in right now because they're both, I think, fundamental drivers and more geopolitical drivers that are out there. There's obviously a lot going on in Venezuela and with OPEC and their discipline to help manage commodity prices and not saturate a market that's being driven by growth in the Permian. At the same time, I'd say demand has continued to be strong, and so that's been very supportive. And inventory levels have remained healthy, and so inventory levels have become more healthy as we've seen levels drop recently, and so I think from an outlook perspective, I think I'm fairly positive. The level we're at now seems like a fair price with what's going on, but
Give me a number.
it's a dynamic market environment. And I think we're probably in a $55 to $65 price environment. So
Yeah. I wrote down your projected 65.
65.
So I got 60.
Okay.
I'm in the middle.
You're right in the middle. Okay, just one last thing before you get going.
Yep.
How far do the Denver Nuggets make it into the playoffs? Do they stand a chance, Kevin?
I think they do stand a chance. As a young team, I think, and I'm sorry for our friends in Texas, I do think they'll beat the San Antonio Spurs and move to the next level. How far they'll get behind that sort of depends on a lot of different things. And so I'm a diehard Nuggets fan, and so that's I'm speaking with a bias there. So,
That was way easier than oil price.
Yeah, exactly.
exactly.
All right.
Well, thanks.
Kevin, thank you very much for being here. We do appreciate that. And, so as we move along here, upcoming for the oil and gas podcast here, again, we talked about we're going to have one of our next guests. This is going to be Tom Chikori. He's the founder of Innovation Illustrated, LLC. And we're really going to be talking about AI, or artificial intelligence, into the oil field. And anything on top of that one, Aaron?
No, I'm excited to have another guest on, and so we'll keep getting expert opinions.
Once again, thank you everyone for listening in. If you have any questions for either Aaron or myself, or our guests when we're able to pre-announce it, send an email to ogpodcast@enercominc.com, and we will answer it on the next show. Thank you once again.